Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have George Lewin-Smith, CEO of Testudo, Parilee Wang, Chief Product Officer of Alloy, and Thomas Squeo, Chief Technology Officer of Thoughtworks. We're here to discuss proactive measures and risk management for AI readiness. It is great to have all of you with us. Welcome to the show. Thomas, I want to kick it off with you with Thoughtworks State of Digital and AI Readiness Report. Where are enterprises right now? Are they in a more mature phase than perhaps they think they are?
Without a doubt. Matter of fact, a lot of people, when they self-assess, they've got themselves further up the maturity curve or capability curve than they actually are. What we're seeing is that teams that are actually operationalizing their technologies or essentially their AI technologies are in the minority, not the majority.
Yeah. One market, George, that is continuing to evolve is ensuring the AI economy. Give us some background on that.
It's a brand new market. It's a brand new category of risk, and we're only seeing this emerge very recently. So we're excited to help companies come in and ensure the liability of using this new technology. We want to help them adopt. We want to enable them to use this technology at scale. However, there are tools in the toolbox like insurance, which can really help them from a senior leadership, but also a liability management perspective. And we're excited to be offering insurance for these AI risks.
Yeah. And apparently part of the challenge is that the good actors and bad actors are leveraging the same type of emerging technologies. So how is AI and deep fakes, how is that changing the fraud landscape?
Yeah, it's a great question. And while we see, so much hype and press around deepfakes today, the main risk that we see today is the fraudsters using the same efficiency measures from AI to do all of their old tricks, right? The same things they've been doing for decades, manually with paper, they're doing incredibly efficiently with AI today. The good news is the same tools that they're using to deploy against financial institutions and against companies today can be used to stop them.
George, you mentioned that the insurance end of AI is something that's relatively new. How is that being tested by AI risk?
Well, it's quite separate, we see, to cyber risk. I think exactly what Parilee was just saying is that essentially cyber risk is getting a lot significantly worse as a consequence of AI technology. We see AI risk as being a separate category, a new category of insurable risk. And we're really focused on the liability risk. So we're thinking about lawsuits, reputational damage, incidents like fraud, where companies could have some serious negative implications of using it. But insurance for generative AI risk is obviously very new because the technology itself is new. The insurance markets are trying to keep up with it, and traditional lines of insurance are actually not affirmatively covering this technology. It's often not the intention of your cyber policy, for example, to cover AI. And so that's why we believe it's a new category and standalone.
Which is interesting because your commercial insurance doesn't cover cyber insurance, and cyber insurance doesn't sound as if it's going to cover AI insurance as
Right.
well. I would imagine that litigation becomes a risk for companies as well as you're still trying to figure out what the value is with AI risk modeling.
Totally. And as soon as you see these exclusions in commercial general liability insurance, that is how new specialist insurance markets are formed. It's exactly what we saw with cyber, as you said, but also other insurances like liquor liability and others. So I think we're really focused on what the litigation and the uptick of litigation means for companies and also the insurers, which are trying to grapple with the risks that they might be silently covering. And it's certainly not the intention of the policy to be covering generative AI risk.
Right. Well, Thomas, one of the ways that you can mitigate this is having a compliance risk management culture first at companies. There are steps that can be taken, whether it's into product design, whether it's into ethics and legal and financial functions, where you can, at the front line, develop this culture that brings privacy, cyber, AI readiness first.
Yeah, explainable AI and building in your practices and guardrails at the outset, those first principles being applied in every aspect of software engineering and the product development lifecycle are key to being able to kind of drive this as an outcome. One of the things that you want to be able to do is have that human in the loop measurable outcome for how you'd actually want to apply that risk or understand that risk. But it's always going to be evolving. So I think, as George says, this is a new category. This is something that we see new techniques coming into play that are in addition to our cyber risk landscape. So we think about DevSecOps. I think this is the natural progression to think about how AI is applied in that journey as it relates to how technologies are operationalized.
So apparently the question really is, if AI tells you that something is wrong, then what?
Yeah, I love that question because that's really the key thing that we need to be answering is how do we make AI actionable, which I think everyone here is very focused on. We think about actionable AI as something that completes the loop. Here's what the risk is, here's what to do about it, and here's what will happen as a result of that action that you take. Alloy's fraud attack radar is a great example. It doesn't just detect that a bank is under a fraud attack, but it actually gives you the exact fix, identifies the folks in question, and helps you take action to get them back out of your ecosystem. That can really transform teams from always playing catch up to getting ahead on these new and emerging risks.
Yeah, well, Parilee, I think part of the issue, particularly with financial institutions, is as much as you try not to act in silos with platform approaches, it's going to be necessary that you work across all of these different functions. So you have that bird's eye view, whether you're talking about AI-enabled fraud or your cyber and risk mitigation plan in general.
I absolutely agree with that. And that's why underlying platforms that really make broad decisions across an institution are more and more critical because that enables you to deploy new technologies strategically and seamlessly across your whole institution, not line of business by line of business or, problem set by problem set.
Right. Um, George, tell us more about when you're evaluating a company and your underwriting approach. How do you access companies' different models or their proprietary data and information and bases and so forth? How do you interact with enterprises as it relates to getting a product that works for the risk that you've modeled out?
Yeah, that's the secret sauce and what we've been absolutely heads down working on. I think the other thing I just mentioned is that the regulators are looking at AI and regulating AI separately to cyber. So I think that's another very clear indicator that this is a separate risk. The EU AI Act is not the EU Cyber Act. It's a new category of regulation, and thus if the regulators are seeing AI as a new risk, so should the rest of us. When it comes to actually underwriting and looking at a company's AI risk, our approach has been to be as non-invasive as possible. My experience at enterprises showed that trying to connect internally, trying to do audits, trying to connect to APIs is a very slow and painful process and actually adds additional cyber risk when trying to make those evaluations. Our approach is to really look at litigation in the market and understand how a company's profile might map accurately to litigation that we've already seen in the market. So we look at firmographic information, so what kind of industry this company's in, what type of revenue, where they're based, the number of employees, but we also look very specifically at AI specific factors. Which base model are they using, what business application, what data is going into it, and how many customers are they serving? Is it internal, is it external facing? These are the factors that we see as being the highest predictive factor for liability risk, rather than a performance metric or an accuracy metric of the AI itself.
George, you had noted that lawsuits are outpacing public perception. Give us more insight into that.
Yeah, so we track all of the generative AI litigation globally, and obviously it has been exponentially increasing over the last few years. Between 23 and 24, AI lawsuits were up 143%, and that certainly has been increasing at a rapid rate this year as well. So the litigation is real, and what's interesting about using litigation data is that it's again real. We know these types of risks are live and active in the market, rather than trying to speculate on types of risk or where there could be better governance structures elsewhere. So we think there's a proactive combination of governance controls, but also insurance, as well as these kind of data insights that can really help position companies for a successful and commercial deployment of generative AI.
Thomas, you had mentioned, or in your notes, you have safety must be engineered in. Is there a concern that there was such a rush in a competitive landscape, whether it's internal, external, to deploy AI technologies, whether it's large language models, agents? Was there enough modeling that went into that, or was it kind of let's get it out into the market and have a wait and see approach, and now they're learning that security needs to be engineered, or was that?
I think that's why George and Parilee's businesses exist, is because of the fact that people were so fast to try to get these things into a production environment. They hadn't considered what the threat surfaces were, what the implications for things like model poisoning are, and so on and so forth, that actually have a real effect on how systems are actually managed from either a kind of a disclosure risk and some things of that nature. So some of those things that were operationalized were ultimately clawed back. And what we see is that we can take, there's been security standards and AI security standards in particular that have been established from MIT Sloan, from Microsoft, from the MITRE Atlas folks. Each of those groups are creating sets of practices that you could now employ as part of your software development lifecycle, but they don't get away from the fact that there need to be guardrails and control systems to be able to understand what is actually happening in that system. I think that the work that Alloy is doing is really material to that in the spaces that they operate around fraud. And I think that if you're going to indemnify an organization against their cyber risk, you need to make sure that they have good practices and principles into what they're actually putting into a production environment in that regard.
Yeah. Well, Parilee, let's go back to that for a moment, because in the absence of AI framework and other frameworks that are evolving here in real time, you have multiple jurisdictions, you have multiple frameworks that Thomas had just recommended. What are best practices if you are a financial institution or just enterprise in general when you're trying to figure out what's the most compliant framework, which is one that's going to help me avoid litigation risk? What's your best action plan?
Yeah, it's a great question. And honestly, banks, financial institutions, other enterprises have thought through model risk management and model governance for a long time. And yes, we have new technologies in play. Yes, we have to think about them differently with different frameworks, different scrutiny. But ultimately, the question of, how are we going to use automation to make the right decisions about people at the right times and redeployed? We see a lot of our clients standing up special groups, really thinking through, how to take what they've done for decades and update it with new technologies and run things through healthy, mature processes to make sure that they're doing right by their customers at the end of the day.
So then they're using existing frameworks that are in place. As an example, we had the EEOC on the show last year, and they were saying even if AI is making employment decisions, you still have to comply with the regulations that are in place. So while it might not be frameworks specific to the technology, there still are frameworks that you have to follow. You can't just completely ignore them because something doesn't exist because the technology is ahead of it.
Absolutely. And if you aren't thinking through all of those gotchas, that's how you're going to wind up with, cyber risk, security risk, and, ultimately some of the risks that, you all are thinking about insuring against. So it's critical that folks are thoughtful, because at the end of the day, you're making decisions about real people and what they can do with their money or what they can do with your products. And those are spaces that have been regulated for a long time.
Yeah. And George, as we think about outlook here, as we wrap up, this conversation could look very different than it does right now in just a year to 3 years from now, because the technology is evolving so quickly. So when you think about insurance policy or policy framework in general, to keep it flexible and to allow it to evolve with the technology, how are you advising clients on that, or what recommendations do you have?
Yeah, so we are very focused on active monitoring of the market, whether it's litigation, whether it's incidents, whether it's the latest deep fakes, whether it's the latest signals that we can extract from the market to give our customers real-time incidents so that they can patch manage in real time as well. So it's critical to help them lower their risk, but also helps lower our risk as well. So we believe in active monitoring is key. The other thing I'd say is the definitional challenge, which I think everyone in the market is very real, which is how do you define generative AI very tightly, that what you're intending to cover or the risks that you're really experiencing are generative AI versus the traditional AI risks, which have been potentially in the market for tens of years. An Excel model is not an artificial intelligence in the definition of maybe ISO, but being really focused on exactly what you're covering from a legal perspective and what you're doing within those legal frameworks as you roll out governance is key. So definitions are absolutely critical, ensuring that you are really acting within frameworks which are secure and responsible, and then active real-time monitoring and technology that we're all working on is absolutely critical to help those enterprises use this technology, because it is bringing huge commercial benefits. It can actually be more accurate, it can be more useful, it can be faster than traditional humans. And so I think we're also excited to help companies get to that place as well, which is what is the future where actually risks can be reduced through using AI as well.
Yeah, and George, that is an excellent point that you make, because Thomas, when you think about regulation in general, there is ambiguity, perhaps intentionally built in. What's the definition of reasonable, right? How are you using data? What are you processing it for? So when you think about outlook and remaining flexible within the space as this continues to evolve, how are you thinking about that?
Well, I think that one of the things you have to have is kind of an evergreen notion of how these things are going to be factored into the life cycle. There's no such thing as a one and done. And if you think about this in the context of AI driven applications versus AI agents, that is going to be something that is an emergent factor that around things like how you have to treat these components as not just software, but as actors independent inside your organization's work, whether that be kind of in the inner loop around software engineering, that middle loops, or that outer loop around customer experience. Agents are starting to cross cut across each of those, and it's required the teams to think about them in a very different way about how I think to George's point about observability, that's one of the key aspects of understanding when one of these systems is acting in its original kind of design, if you will.
Yeah. And Parilee, I'm going to ask you this question in a different way. What about through the lens of customer experience as this continues to evolve?
Yeah, I love that question. Because when you think about balancing fraud prevention and customer experience, that's really the key that all of our clients care about. I have spent a lot of time with Mountain America Credit Union, who's one of our clients today, who are incredibly focused on both growing their business and providing high quality experiences to their members and leveraging ML technology as well as AI technology. They've been able to decrease potential fraudulent applications by 30%. So you can see that, the right deployment of technology can get ahead of the fraudsters, not just be, struggling to catch up. And really that becomes how folks run their business. High automation rates, being able to hit the right friction points at the right time in the customer experiences, and then using that ultimately to get to the right decisions about folks and who they work with to deliver the best possible customer experiences downstream.
All right. Appreciate all of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.